Welcome back. It's tax filing season, and that's exactly what we're discussing on this week's edition of Money, Money, Money. So, Parizad, I just want to spend a quick 1 minute to go through what a self-employed individual must keep in mind, because he doesn't have the Form 16, right, which a salaried employee does. So, how do they go about tax filing?
So it depends. If you're into some professional business, then your gross receipts, you may be subject to tax audits. You may want to claim certain permissible deductions. Any expenditure which is incurred for making the business income, there could be permissible deductions. And all net result is you still have to file a tax return. And there could be certain deductions under the Chapter 6, which is the 80s section, where if you're a self-employed individual not in receipt of a rent allowance from your employer, then you can get some meager rent deductions as well, of up to 2,000 per annum. But basically, your gross receipts minus your permissible business expenditure.
Right. Yeah. So, Harsh, the perception is that if you are self-employed, you do get to, claim a lot of legitimate deductions as business expenses. Is that right?
Oh, absolutely. So I think, and obviously when the list of deductions are not like salaried, the list of deductions is pretty cut and dried. As far as businessmen or professionals are concerned, any expenditure you incur for earning that income is allowed as a deduction, any legitimate expenditure that you incur. And therefore that does give a lot of leeway. And hence this perception.
And it's more tax efficient, perhaps, format of existing, if I could call it that.
So a lot of things which you would otherwise say put down as personal expenditure, perhaps, I mean, as a businessman, you can perhaps claim it as a deduction.
As long as you can convince the tax department that it is legitimate business expenditure. Parizad, one additional thing that I wanted some clarity on, it seems this year onwards, for those who are earning income in excess of 50 lakhs, there are additional disclosures that have to be prepared?
Yes, absolutely. The income tax forms statutorily provide for a schedule which is called AL, okay? And we must not lose sight of that, because that's applicable to all individuals, irrespective of your residential status, irrespective of where you hold the assets, okay? If your threshold income taxable in limit is above 50 lakhs, it's basically your entire assets and liabilities schedule. Some of the items prescribed are land, building, your physical cash in hand as of 31st March 2016, jewelry, okay?
So the taxman wants to know everything.
They want to know everything, and there is basically these, your personal car, if any, okay? Not your company provided car, but your personal car. Basically all your assets which are at cost. So the original cost of these assets. So even if you have, jewelry lying with you which is inherited, technically it's your asset. Or if you purchased it during the year, it's the total value of the assets as of the 31st March 2016. If you have any loan outstanding
on inheritance, as you mentioned, would you have to declare if you've inherited an asset in a certain financial year, or what if it's there with you from earlier years, you inherited it several years back, or would you have to report it every year?
So see, earlier you may be familiar, there was a wealth tax regime exactly on these kind of non-productive assets, which was abolished, I think, in 2014-15. With the abolishment of wealth tax, this schedule has come up in the form of disclosures. So it's basically assets held by you as at the end of the financial year. So whatever is your asset, if it's in your possession,
even if it might not be fresh inheritance in this year.
Yes, it need not be a fresh purchase. I mean, you can have properties which are with you for years, okay? The valuation or the amount at which you disclose as per the schedule instructions which are given in the form is the cost of it. And if you have any loan against these items of asset, then you disclose that as well. So the net resultant figure between your assets and liabilities is all part of a mandatory disclosure this year in your income tax return form.
Important to keep in mind, especially for those who are earning in excess of 50, or rather those who have taxable income
in excess of 50
lakh rupees. All right. Now we come down to the process and the hygiene elements of filing tax. And Parizad, the government has been increasingly saying that e-filing is the way to go, and they're really advertising it. But how easy or difficult is it? And apart from your PAN number, what else do you need? How do you go about, making your e-file return?
So the process is actually fairly easy. Everything is electronic. We are in this area of era of digitization, you know. I mean, as a step, some of the hygiene factors are that you first start collating your streams of income, right? I mean, you should know what income you're generating. Is it salary income? Then go about collecting your backup documents like your Form 16s. You know, if there are certain other payments, then your TDS will be evidenced through Form 16As. Start collecting your bank statements, the interest certificates. If you're having a housing loan, then the interest certificate will come from the bank, things like that. The backup documents to your collection or to your tabulation of income. We discuss house property, you'll have your rentals, you'll have your, interest outgoes, so the backup documents which have to corroborate your income streams as well. You start tabulating it on an annualized fashion, you arrive at the net tax liability, you factor in your taxes which have already been deducted at source, okay? When it comes to the actual process of, uploading the tax return, which is all under e-filing as we call it, there are income tax websites as well. One important point which I omitted to mention was your 26ES form. You need to download that from the income tax website because that is a good checklist. You can actually match and reconcile between what taxes have been deducted, even say by your employer in the Form 16. There are times when, you miss out, human memory fails you. So, you may have sold certain things, property, and, it throws up in the 26ES, but it's not in your mind too.
So everything that has already been paid by either you or on your behalf,
on which taxes have been deducted at source, 26ES is like the guiding document which you should download and start correlating.
Okay.
Once you're through with your actual tabulation of income and you arrive at your net result and tax liability, it's time to visit either the income tax website, okay, or you have these private portals which can also help you with the filing, okay. However, the actual form has to be uploaded on the income tax government website, okay. There are various form numbers as you can see from there. So depending on the stream of income, whether it's you need to fill the correct form.
I was just coming to that. So how do you know which is the right ITR or the income tax return form?
The instructions to filing, I mean the literature is all available. So if you're going through a private preparer, they'll guide you. If you're doing it yourself on the income tax portal, it's pretty fairly, simple set of instructions.
ITR 1 I think is the most common
one is for salary and interest, Then there are items like if you're capital gains, then you can't fill one, okay. If you have more than one house property, then it's a separate form. It's actually fairly simplistically explained, okay. You fill the right form and then you generate an XML file, okay. The last process is actually uploading the return, okay. Very often people assume that once the file is uploaded and it's like posted, it's all over and done with. But you still have the last stage left, which is what we call the e-verifying of the return uploaded. There are a couple of ways to do it. If you want to do it manually, then once the auto acknowledgement comes on ITR-5, after you have uploaded the return, you print that, sign it in blue ink to be precise, okay, and then you send it to
the department.
CPC Bangalore, which is around within a prescribed time limit of 120 days from the date you file the return.
Right.
Date of filing is the date when you upload it on the tax website.
Right.
If you don't want to do the manual signing of the auto acknowledgement, then there are ways to do it with your Aadhaar, okay. You link it to your Aadhaar card, you get a one-time password and you can do it through that, or you can even do it through your net banking. So only once you're through with this last step, can you heave a sigh of relief and say the tax filing is over.
The tax expert makes it sound so simple and so smooth. I'm pretty sure it's not as simple as that. But anyway, Harsh, some last thoughts and last perhaps recommendations, the things to avoid, the mistakes to avoid for our viewers.
So couple of things which I have experienced. I think one, people have this wrong notion that just because the money that I own, I have put it in my wife's name as a fixed deposit, the interest on that is not taxable in my hands. Just because the money that I have put it in my minor son's name, the interest on that is not taxable and there is no TDS on that.
Right.
Please remember, any transfer that you have made to your wife or to your minor child, the income from that will be taxed in your hands. You better report it. It will be treated as under-reporting of income, concealment of income. Second thing is people sometimes hesitate to mention. Now this time they made it compulsory to mention all your bank accounts. Otherwise it was optional to mention your bank account. Please mention your bank account because refunds, if any, and a lot of salaried taxpayers have refunds. Refunds, if any, are now compulsorily going to be credited back into your bank account. So make sure that those details are correct.
Okay.
Sure, the tax guy now knows all your bank accounts,
Sure.
but sure, your refund will also come to the right bank account.
Well, that's a great thought to end on. Hoping for that refund. Suddenly it shows up one fine day in your bank account. All right. Thanks, Parizad and Harsh, for taking all the time and helping us get tax ready. That's it on this episode of Money, Money, Money. Thank you for being with us. Of course, your feedback and suggestions are welcome as always. We'll see you next week.